let's invite our market master for the morning, Vibhav Kapoor of IL&FS, joins us in the studio. Morning, Vibhav. Good to have you with us.
Thank you.
Well, what's the sense? The markets have moved a good 9%, 10% from the recent lows. Is there enough steam? Is there enough good news in terms of earnings or macro data for this rally to continue?
I think it's largely been a risk on towards the emerging markets over the past few weeks after the US did not increase interest rates. So that's what's caused this rally largely. I think we are approaching a level where there is a lot of resistance overhead, 83, 8400 levels. So you'll need some more good news for the market to cross these levels.
Okay, some more good news for the market to cross 8400, but what about the downside? Is it still open, and do you think we could get back to those 7500 levels?
Unlikely, because I don't think that the US will increase rates very soon now, so that risk off may not happen. So I think that risk of 75, 76 is there only if again there's a lot of panic in the global markets, which could happen probably only if the US again were to think of increasing interest rates very shortly. So I think for the time being probably you are in a sort of a range, maybe 8,000 to 8,400, and then you'll have to take it after that.
All right. Just a word on the markets. Vibhav, Sensex Nifty still very, very flat. The positive is Hero Motor and the negative is ACC. So not much by way of wide divergences in the markets. There's just one stock that's up 2%, that is Hero Motor, and a couple of stocks that are down about over 1%. ACC leads the list with a 1.5% downtick. Otherwise, all stocks are between 1% in the green or maybe 0.6 in the green and 0.6 in the red. So it's really very, very quiet at the heavyweight level. But at the mid-cap level, of course, there is enough of fireworks. Adani Transmission continues with its good work. I think it's gaining about another 4% today. And those Amtech Auto Group companies, which seem to be seeing some kind of relief rally over the past few days, the Castex and JMT Auto, all of them are also once again showing a little bit of green on the screen. So plenty of action in the mid-cap space, but on the heavies, really not much to look forward to. Any other minor earnings? Maybe you want to pull up Federal Bank as well. That was the one mid-cap company that disappointed with its numbers, and that's likely to start fairly badly, about 8% downtick in Federal Bank. Let's just wait for the market opening, unless you want to spot out something else.
A couple of IT names were looking good. So Mphasis had a good quarter this time. Zensar Technologies had a good quarter. So those stocks could be moving higher this morning, Mphasis and Zensar. And then you had a Syngene that had a very good quarter as well. So Syngene saw revenue growth of almost 30% and a good margin performance. And that stock in pre-opening is also up almost about 5%. But in just a couple of seconds from now, the markets will open and expected to open flat.
That's a very, very flat opening for the Sensex and the Nifty. Okay, not even worth reading. It's that small a decimal point. And as the pre-market indicated, it's ACC which is leading the list. Actually, Dr. Reddy is seeing reasonable weakness, 1.7%. That's among the losers, and the profit taking coming into Tata Motors after several good days, even weeks. That stock is seeing some profit taking, about 1% down at this point in time. K in India, expectedly, K in India and ONGC seeing a little bit of selling with the crude prices moving lower. And among the green stocks, Hero Motor leads the list, 2.2% higher. And among others, it's just a mild shade of green. Bharti Airtel 0.8 higher, Infosys 0.7 higher, Bajaj Auto results due today 0.6 higher, TCS 0.5% higher, HCL Tech likewise, Wipro likewise, Hindalco up, HDFC Bank all up about 1/3%. Really nothing very, very noteworthy at all in the market. The mid-caps are the ones that are continuing with a 0.3% uptick. I'm a little surprised that Yes Bank is not showing any signs of life. It's flat actually. They've cut their savings rate, and that forms a good 15% of their total deposit kitty. Cutting it by 1% in terms of interest outgo is likely to be positive for that stock, and may bring it some net margins increase by about 10 basis points. So Yes Bank should logically react positively to that. It's getting into flat terrain. Okay, now green. Did I talk up the stock? I'm only pointing out to a news that should be positive for Yes Bank. But there is action in the mid. Okay, the Sensex and the Nifty, meanwhile, have moved into the green along with the Bank Nifty, about 0.25%. Sonia, the mid caps are the ones where there is action.
Oh yes, the mid-caps once again are doing much better than the frontliners, so up about 0.5%. The market breadth is handsome at 3:1 in favor of the advances. Straight up to individual stocks then, you have Syngene, which is up 6% after reporting a strong performance this quarter. So that stock is holding well in the green. Then you have Emphasis, where the quarter has been quite good for the company this time. So Emphasis is up almost about 4.5%. Zensar, revenue growth of 7.5%. Margins have improved slightly. So Zensar is up in the green, 2.5% there. Adani Transmission was a big mover from yesterday. So that stock is once again up in the green after a good set of numbers, 2.5% higher. GM Breweries, our earnings pataha, is also giving you good returns this morning after a good set of numbers. So GM Breweries is up 5%. On the downside, you have Everest Industries reacting to its numbers, down about 8%. You have Federal Bank reacting to weak numbers as well, down about 8%. And on the upside, Bajaj Finserv had a very good quarter this time yet again, although the general insurance business has been slightly slow, but Bajaj Finserv is up in the green. So these are the list of movers.
All right, Anuj, joining us now. Any observations? Markets in the green, but you don't think there is enough firepower to lunge towards 8,300?
You know, clearly that would be the minor resistance point. The big resistance, of course, would be the 200-day moving average. But again, the mid caps have started well, Lata, and that really is the story. I mean, we keep talking about the Nifty, but the money has been made in individual names, and my sense is that's going to continue. Though, as I said in the morning, yesterday there was a bit of a warning sign with stocks like Jet Airways and SpiceJet. So, clear indication to not overstay your welcome, but as long as you keep your stop losses intact, you're going to make a lot of money in mid caps. That's the place to be.
All right, thanks a lot for that, Anuj. But Vibhav, exactly on that note, a couple of people, including Anuj, repeatedly have been telling us markets will do well, but indices may not do well. Is that the sense that there are a lot of bottom-up stories?
There are some bottom-up stories, of course. There's no doubt about that, and they have done well. But you have to be careful, and we've seen many number of times that when the mid caps do well, people just get into them without looking at valuations and other things, and then they suffer later on. So definitely, yes, there are. I think it's a bottoms-up market to some extent, but you need to be careful.
Would you buy any of these two-wheeler companies now, Vibhav? Because, although the operating performance of a Hero MotoCorp has been good, the problem continues to be the kind of competition that it's getting hit with.
Yeah, of course, as far as two-wheelers concerned, the Honda entry of Honda 2 years ago has really made a lot of difference, and that's taken away a big lot of market share. Also, the rural economy has not been doing so well. But I think going forward, if you are positive on the economy, then over the 12 or 18 months period, I think the rural demand will start to pick up, and therefore some of these could be good buys over a 12 to 18 month time frame.
Our macros improved considerably. The IIP data, while it tends to be a slightly eccentric number, volatile number, if you looked at it in a 3-month rolling basis as well, or even year to date, April, August, it was a good 4.5% higher. Are you seeing it anywhere in the earnings season itself that things are recovering?
Well, that's not really happening so far, and I think that's one of the main reasons why you're not seeing the Nifty move up in a big way, because earnings are not picking up the way they should have or the way the market expected them. If you see this year in FY16, I think first quarter the Nifty had about -2% earnings growth. It'll probably have about 5% in the second quarter. So in the first half, you're only having about 3% earnings growth. So I think there's still going to be downgrades for the full year, where people are expecting 15% or 12% for the full year. I don't think that's going to happen. So it's probably be in the region of 7-8%. And even for that, you need a very strong second half. Of course, there's some base effect there. And going into FY17 again, I think the consensus estimates are still 20%, 22%. I doubt whether you're going to reach that number. So there would be some downgrades happening for FY17 also. And unless the earnings growth picks up meaningfully, the Nifty is going to find it difficult to move up in a very big way. But having said that, I think over the next 12 to 18 months, you will see the reflection of these macro improvements in earnings at some point of time. Although they may not be as strong as what the market is expecting now.
Okay, so 7 to 8% earnings growth is what you're expecting for the full year. What about, some of these sectors like the smaller private sector banks? We've seen some casualties this time around, whether it was Federal Bank, whether it was DCB Bank. How do you approach that space now?
Well, I think we need to still wait for the larger private sector banks to report and see what sort of earnings quality and the asset quality picture is there to really be able to make out what's happening in the sector. But the whole thing is that the banking sector as a whole, I think, is a very, very important issue, and that needs to be resolved. This whole thing about asset quality, the bankruptcy law, all these things need to happen in the next 6-8 months for the banking sector to really improve in a big way.
Well, at least the DISCOM knot is getting de-knotted, you think?
I think so. I think the government is trying a lot of things there. Previous 2 times it hasn't succeeded. But I think the government is trying a different approach this time. So I think that's definitely a very positive thing that's happening. And if it were to go through, it should definitely help the banking sector.
What about your overall view of the banking sector? I mean, this is a sector where, I was counting 46 banks to date, private and public. That's going to increase to 67 in the next 1 year or 18 months.
Sure.
A 50% increase in competition should debilitate everyone.
Well, I think it will take time, for that to happen, because the new banks will take time to set up their branches, set up their systems. So if you're talking, say, over a 5-year time frame, then definitely I think that could have an impact.
But these guys come with networks, no? Idea comes with a network.
Yeah,
Airtel comes with a network.
Yeah, they do, but I still think, it takes time for that to percolate and for them to market their products, etc.
On your phone?
No, I don't. I'm not a very technology-savvy person. But, I think that's a good point, that over a 5-year time frame, not only banks in India, I think the whole concept of banking is going to change over a 5 to 10-year time frame with these payment banks coming in and so many, other technology shifts happening there. So over a 5-10-year time frame, I think things are going to be very different, and you need to be really very watchful of what is happening there.
Okay, you did mention that from a 12 to 18-month time horizon, the two-wheeler space looks like it could offer good value. Any other sectors where you see value now?
Well, it's going to depend a lot. See, if you really look at it, there's, if you look at the multiples overall, there's no great value, as you would call it, anywhere. When I say value, I mean prices are well below fair value. So it's not that sort of a market. Wherever companies are doing well, valuations are pretty high, or they are well priced. And where P's are low, it's because the companies are not doing so well. Yet over a 12 to 18-month time frame, because we expect the economy to improve reasonably and therefore demand to pick up, a lot of the sectors which are related to the economy should do well. But having said that, I think there's an important point here, is that today what is happening is top line growth is not that good, because demand is not there, but a lot of companies are doing well because margins are expanding because of lower commodity prices, etc. And the macros of the country have been really helped by fall in commodity prices, fall in oil prices, and now maybe fall in interest rates. So if you look down 12 months from now, I think a lot of these benefits are going to give away, are not going to be there to that extent, because I don't think you'll see a bigger fall in commodity prices from here. I don't think you're going to see a big fall in oil prices from here. And interest rates may go down by another 50 basis points. So by this time next year, most of these benefits would have gone away. And you would really need a lot of improvement in top line through demand to volume and pricing for companies to be able to grow well.
Okay. Actually, some companies, consumer durables, were telling us that demand has picked up. In particular, air conditioner companies told us that there's a 15 to 20% demand. You don't see the famed urban discretionary demand returning?
No,
I thought the ACs indicated that.
Yeah, I think it will. I mean, cars are also showing that, for that matter. So what I'm saying is that we do see definitely, these IIP numbers improvement, interest rates coming down, and the various steps which the government is taking. These will lead to an improvement in demand in FY17, and that is what would keep companies, would help companies in doing well. All I'm saying is that this whole thing about expansion of margins is a story for only the next maybe 6 months. After that, it's not going to happen, and therefore after that, What is really going to be important is that demand picks up, which I think it will. And that is why we are cautiously optimistic on the market going forward over the next, say, 18-month time frame.
Okay.
Okay, by the way, just wanted to point out that Federal Bank is now down almost 15% post its numbers, and that stock is just taking it on the chin as far as volumes are concerned as well. Okay, now down almost about 13-odd%. Vibhav, we've discussed this in the past, but what do you do if you own a bank like this? Do you sort of move out of it, or do you still keep the faith and, play for the long haul?
I think again the issue is if you're talking about any individual bank, individual company, you have to see how bad the fundamentals are, what are the valuations. I think, and that brings me to an important point generally is that a lot of investors, I feel, and even analysts, they tend to ignore valuations. But valuation is really what is important. And, even if a company is doing really well, if the valuations are high, you may still make money, but you're not going to make big money. I remember when the market was close to 9,000, we had said that in one of the interviews, that maybe the market will go up over a period of time, but you're not going to make big money at 9,000 at that point of time. So similarly for, to answer your question about individual banks, etc., you have to really be very, very sensitive to what value, whether there is value there.
Okay. So therefore, an incremental 100 rupees that I give you, where would you put it?
I would still put it mostly in equity. I mean, if you're talking of asset
Yes.
classes.
And within equities?
Say 80% equity and 20% bonds, because there could still be some gains to be made in the bond market and bond funds. And within the equity, probably, I would say at least 60 to 70% of that would have to be in cyclicals and domestic economy-related sectors.
All right, Vibhav, thank you very much for joining us with your perspective as well as your market preferences. That's Vibhav of IL&FS. Not terribly bullish, but cautiously optimistic, perhaps.
Just want to point out one stock, Lata, before we move on. Bharti Airtel, it's now up almost about 3-odd% and has become and is the biggest Nifty gainer as we speak. Remember, Bharti has sold 8,300 towers in Africa for $1.7 billion, and that will, of course, help it retire a lot of its debt. Almost 11,000 crores has come in, and that's one of the reasons why Bharti is up and away.
Yeah, the deal is done. It was announced in the exchange.